September opened with layered signals across currencies, yields, and sectors. Volatility keeps pointing lower, the dollar continues to carve a base, and sector rotations shape the market's rhythm. Let's step into the week's strategy landscape and see where the signals are leading. And as usual, we start with the Volatility Index. This is the candle map, the daily candles for the Volatility Index, S&P 500, and Volatility Index futures. What we are seeing here, that despite a very good attempt on Friday to form a green candle, and it was a real threat, I would say, in the end, volatility formed just a doji, which is likely a continuation doji, bearish continuation with a freshly made bearish cross 8x20 EMA, and the futures formed a thrusting line candle, which is also resembles a doji. Most likely we are looking for the move lower. If we look at the weekly frame closure, we can see a fairly strong bearish candles which were rejected at important resistance lines, and now we have red bearish candles on the weekly frame. So the chances for volatility to continue lower next week are significant, even though we cannot rule out bounces along the way, which is quite normal. The overall direction is bearish, and if you're interested in the details, in the potential next targets that we also discuss in our weekly reports on our website, and right now we are running a promotion so that you can check and subscribe if you are interested in this one. Well, that's all for volatility. Now let's have a look at the dollar index. The dollar is technically on the daily frame, it is bearish and it is showing a continued move lower. However, if we look at the weekly frame and the 8-day frame, which also closed on Friday, we cannot say precisely that we see a very strong move downward. So most likely dollar is forming a bottom, and for example, this green candle, which was formed, the big one on the weekly frame, which was formed at the end of July, it's still in play, and 5 weeks later, dollar wasn't able to overcome the bullish odds from this weekly candle. So the chances for a move higher here are significant, even though we might see a quick touch on the lower low before we are seeing a move higher. The same applies to the 8-day frame, which potentially is forming a rising three methods here. We are seeing three candles within the body of the green candle. The chances for moving higher could be slightly better. And if we look at the Elliott waves, this is the chart that we've been tracking since April. Yeah, since April with the same targets. So right now dollar is in a target zone, and I think that is forming a very big bullish flag here. So maybe another lower low and a rally higher. And at the micro level, there is a possibility of an ending diagonal here with a new lower low, which would be wave 1, 2, 3, 4, 5. And once this diagonal completes, I would be looking for a very, very strong move upward. Well, that's the perspective for dollar. Now let's have a look at the dollar yen trade, which is our regular 2. So what we are seeing is on the weekly frame, dollar is gaining strength. We have two green candles technically it's minimum required for a reversal. However, it's not a confirmation yet. However, I'd like to mention that dollar is gaining weight right now, and if we look at this ratio, dollar to yen, we are seeing it is supported by 8 and 20 weak EMA support lines, and the chances for it to curl upward are significant. So from the bigger frame, like 10-day frame, we are seeing potential setup for rising three methods. Again, this candle here could be very important, and it closes on Tuesday. If we look at the bigger frame, this is the 3 months frame or quarterly frame. So right now, there is a neutral position for the dollar yen. However, if dollar gains about 2% in the remaining 3 weeks, and there are chances for it if we look at the weekly and the 10-day frame, well, it could be a bullish engulfing on the quarterly frame, which would open a strong path upward for the dollar. Now let's have a look at the Elliott waves. This is the chart that we've been tracking since November 2023, and right now I think that dollar is forming a triangle here. One more move lower, and we would be looking for a thrust for a very strong move upward towards these targets that are the same, remain the same. Well, that's all for Japanese yen. Now let's have a look at the Canadian dollar and US dollar pair. So compared to, if we compare it to Japanese yen, I would say that Canadian dollar looks weaker, and the very important closure was on Friday, and this is an inside up candle, which is an equivalent of bullish engulfing. It closed just a few basis points above the open of the previous week, and the chances for continued move higher are significant. The same we are seeing on the daily frame. We are looking for like 5 green candles in a row already. On the 15-day frame, which is closing next week, so far this candle looks neutral bullish, and I would say that we have a confirmation of a bottom here on the 15-day frame. So the monthly, after a strong bullish engulfing in July, August wasn't able to negate this formation, and now we are seeing the consequences of this move. Potentially September and October could be very strong bullish moves, bullish months for the US dollar. And the chart remains the same. We are not changing it for practically 4 years. This is just adding more details to it. So this is the perspective for US Canadian dollar pair. Now let's have a look at the other elements of our strategy, and this is the global trade Baltic Dry Index. What we are seeing is that the weekly frame failed to confirm a reversal here, and the chances for continuation are significant. It's still holding above the weekly moving 8 weeks moving average, which is the yellow line. And I would like to mention that we are getting closer to the 100 over 200 weeks moving average bullish golden cross, purple over red. If we look at the 15-day frame, which is closing in a couple of days, so far this is going to be the failure, unless we see a very strong move towards 1400 or less, then this formation will be mostly a consolidating phase before the next move higher. And I'd like to reiterate here that the 2 months frame, which closed in August, formed a very strong bullish candle, and the chances for the next 2 months to be bullish are significant. If we look at the Elliott wave formation, something that we are tracking for a while, I think that there is a good chance that Baltic Dry Index is setting for a rally similar to what it did in 2021, 2022. Well, this is a very similar formation being formed. Okay, so now let's move on to the bond market. Let's have a look at the 10-year yield. So on the daily frame, it looks bearish. However, I'd like to warn you that there is a good chance that we might see a bounce here, because small frames, several hourly frames, are strongly overbought. The question is what kind of bounce it will be. Speaking about the longer term, the midterm, I identified this range long ago, and I think we were talking about it since May, saying that as soon as this range, the green and the red horizontal lines, as soon as this range is broken, then we will see a new direction. So far, yield is between the lines, and we are looking for a horizontal move. The 10-day frame looked closed with a bearish candle, with a good chance to see lower prices in the next 10 days. Let's see if this move would be sufficient to break the big range. Now let's have a look at the long-term perspective. This is the chart that we shared in December 2022. It's practically unchanged. And now if we look at the perspective formation, what is happening right now, I think that the wave 2, which we were talking, this one, wave 1, 2. Wave 2 is being extended, and right now the yield is forming a bullish flag. So it might take a while, because this is a 2 months frame. We might be looking for several months or maybe even quarters to complete the structure. And I'd like to say that the structure from the bottom was an impulsive wave. So let me change the color so that you can see clearly it was an impulsive wave. Now we are looking for bullish flag and another move upward. That's the perspective. If you're interested in a micro charts, we share them in our weekly reports on the yields. And this is the Canadian 5-year yield. What we are seeing that in August it managed to form a dark cloud cover, and this is the monthly chart. And if in September it stays like this or moves lower, it will be technically a reversal, and I would be looking for a lower low. The formation of the bottom in 2020 was practically the same as the one that US 10-year yield completed, and this will be very similar formation downward too, because this wave, it looks corrective so far. And we would be looking for September 17th, which is the day for rate announcement by the Fed and the Bank of Canada on the same day. let's see what happens and how this announcement will impact these two charts. By the way, it will be also a strong impact on the US dollar Canadian dollar ratio, especially if the Canadian bank lowers the rate and the US remains the same. Well, now let's talk about TLT. What is interesting here is that the TLT made a very strong bullish move, and I'd like to say that it's a very unusual one, because the candle here is moved and formed entirely above the Bollinger Bands, which is a very strong bearish signal. Even though it moved above the 200 days moving average, which is a red line, I still think that the risk of a reversal is very high. And now I will be looking for what kind of candle it forms during the next pullback. The weekly candle looks bullish at this moment, but well, it still needs a confirmation from the technical perspective. And the next checkpoint will be the 10-day frame, which is closing on Monday. If it closes above 88.44, it means that there is a good chance for forming a bottom on this large frame, and TLT would be open a path to move higher. However, a failure to close above this level would be bearish, and I would say that in this case we might be looking for a continued move lower. And this is the chart that we've been tracking since May. This is the short term chart, and I'd like to emphasize a couple of important points here. First of all, this is from the lower low. The very first wave was corrective, and it means that it could be a beginning of a bigger structure, something like this bigger flag, for example, like I marked here, WXY. That's one option. Another option would be the way this would be the very first wave A, and now we are looking for a bigger wave B. And so maybe I'll put it so this was wave A. Now we are looking for wave B here, and potentially could be wave C before we look at the lower low. So this is the corrective structure moving upward, and there is a very high risk of printing a lower low one way or the other. So right now it's there are still quite a few paths open, and at this point it's really really complex structure. Well, and as I said before, be careful about this about this candle that called on Friday. So it's above Bollinger Bands, and it had a very good chance to reverse the path here. Well, that's all for TLT. Now let's take a look at the sectors in S&P 500. So I have the weekly closure of financial, technology, healthcare, consumer discretionary. This is industrial, staples, communication services, and energy. So if we look at all of them from the candles perspective, I'd like to say that the majority, particularly the technology, communication, staples, are bullish. Some some of them like staples and industrials, they are bullish neutral, so still pending confirmation. But technology and communication and discretionary and even healthcare are fairly strong bullish. The only concern is financial, because it closed with an inside down candle, and on the daily frame, we will talk about it a bit later, on the daily frame it's also bearish, so we can have some volatility about this sector, and let's see what kind of results it will have next week. So far, this reversal, but potential bearish reversal, is not confirmed. And the only one which is fairly strong bearish is the energy. So with this picture, I would say that the market has much better perspective to move higher next week. And now let's have a look at the technology sector a little closer. So this is it formed a bullish weekly candle, and at the same time, the daily candle at the beginning of the day, it looks strongly bearish. I was thinking it would form a bearish engulfing or some sort, but in the end, it closed with just an on neck candle, which is a most likely a bullish continuation. Let's see what happens and how it works next week. So the technology, the chart remains the same. We are not changing anything here. So this is the chart that we discussed way back in June. And now let's talk about the financial sector. As we can see on the map here, the daily closure on Friday was strong bearish with a very good chance to continue lower. And also on the weekly frame, we had a bearish candle inside down. However, I'd like to emphasize both candles require confirmations. Let's see what happens on Monday. However, if we look at the 10-day frame, which is closing on Monday as well, so if it closes like this, or maybe a little lower, this most likely going to be a bullish continuation candle. Well, however, there is a chance for it to become a harami. So the risks are on the table, and let's see whether financial sector will drag the entire market with it. So far, as we remember, the other sectors look rather bullish. And speaking about the financial sector long-term perspective, this is the chart that we've been tracking since July 2023 for over 2 years. The chart remains the same, and those who listened to us then would make about 58% from the level in July 2023. Well, that's the perspective for financial. We are not changing it. Let's see whether the market continues higher next week. And now let's wrap it up. The picture this week is one of contrasts. Volatility remains firmly bearish, though short bursts of turbulence should not be ruled out. The dollar continues its slow bottoming process with possible lower lows ahead, while against the yen it shows measured trends. The Canadian dollar looks weaker, and the upcoming September 17th Bank of Canada announcement on the same day as the Fed could be a key pivot. Yields lean lower, while TLT's sharp bounce comes with a dangerous technical overstretch. Monday will be the checkpoint. Across sectors, the balance is constructive, mostly in bullish or moderately bullish, with financials flashing an unconfirmed bearish setup and energy staying weak. The broader health remains bullish, supported by momentum beneath the surface. Much deeper analysis, long-term charts, and detailed technical studies are available in the weekly written reports on our site. And we are running right now a promotion for the new members only. Engage with the charts, share this digest with your trading circles, and subscribe on YouTube for more updates. At Investing Angles, we chart the charts before the crowd even blinks.